Hello and welcome back to the Geordie Pig Investor channel. Today we have got our monthly Trading 212 portfolio update video for June. In today's video we're going to have a little look through my positions, see how the portfolio has performed over the last month. We're currently on the 2nd of July right now, and we're going to have a little look through the portfolio, see how it performed over the last month. So we can see from last month we were sitting at around about £20,000 portfolio value, and that has increased nicely up towards £21,600 as of today. At the start of July or end of June, it was around £21,200, which meant the portfolio gained around about £1,200 this month. But having said that, we can see that overall it didn't increase much at all in the returns and has actually since decreased back down over the last 2 days since we started July. Am I concerned about this? Absolutely not, because I'm very happy with the companies that I'm buying into. I believe that they all pay very good dividends and are going to continue to pay them over the long term. And I believe that the prices I'm buying in at, after doing my stock analysis across all my stocks, means I'm buying at a very attractive price, and I'll continue to buy into these stocks at these prices. If we have a look through my pies, we can see that it is only my ETF pie that is now in the positive, and we can see that my US and UK growth dividend pies, for the first time ever since opening this account back in August, are both actually slightly into the negative. Like I say, I'm not concerned about this. You may look at this and think, well, surely you should only be investing into ETFs because this is where I've been reaping the rewards and seeing the short-term profits. But this portfolio is for the long term, and the stocks that I'm buying into are for the long term as well. And not only that, but I am a dividend growth investor. These stocks that I'm buying, that I believe I'm buying at a good price, I'm looking to buy into for the long term. That means that I'm buying these stocks for 10 plus years, and each of the stocks are paying me a dividend. Some of the dividends are very healthy right now, such as British American Tobacco, which pays a dividend payment of around a 9% yield. And then we have other stocks which are a lot smaller yields, such as a few of them in my US growth dividend stock pie, which would be like Microsoft and Apple. I have a good mix between these within my portfolio. I believe I have a nice blend, and I think my overall dividend yield between my portfolio and my positions is around the 3% mark, which is exactly where I want to be. Not only that, but my dividend growth rate between my pies, 1 year growth rate is very healthy, closing in on around about an 8 to 10% growth rate, and the 5-year growth rate is also in a similar position. So this shows that all of my stocks are looking to grow their dividend over the long term, which means that if their dividend is at above a 3% rate, it's going to comfortably beat inflation over the long term. That is what the goal is of my portfolio, and I do believe that with these positions that I am buying, I am getting in at prices that I'm happy to pay, so over the long term they are still going to appreciate in value and I will get return on my capital. If we have a look through the actual investments themselves, we do still have most of my positions in the green. It's just a little bit unfortunate. It's actually my smaller positions that are in the green. The reason for this is because a lot of the red positions I have just been continuing to buy into, as I believe they're the ones that are at the good price. So if I was to continue to buy into some of the higher up green positions, such as Apple, which is now up 20%, I don't believe that it's at a good price right now, being at over $200. If it is to drop below that mark, that's usually where I have a notification and I know then to start buying into that stock again. So every month I look to buy into every single stock that I believe is undervalued. We can see that I've got stocks such as Vici Properties, which I have a massive position in. We also have Starbucks, which is holding a rather big position. And we do have a couple of UK stocks as well, which are holding bigger positions now, such as Greencoat Wind, Diageo and Burberry. Out of these positions, all of them are obviously in the red, which is unfortunate. But like I say, I'm very confident that they will take a turn for the better. If that's in 6 months, 12 months, 18 months, I don't mind, because guess what? I'm going to continue to buy into them, continue to increase that dividend payment I'll be receiving, and they are going to always be paying those dividends to me. Unless I see anything concerning with the companies, such as potential dividend cuts or actual fundamentals within the company, such as their free cash flow decreasing, or any other red flags, then I will continue to buy into these stocks. If we look through all the positions, we can see they are performing pretty well as a whole. We do have a few more reds we'd like to see, but a lot of them are very small reds. And my 3 ETFs are my main positions, as you can see with the pies across here. With nearly £7,000 invested in my ETFs, I've returned over £700 in this portfolio now, which is really good. And then the rest of my portfolios are in slightly negative positions, being down around about £200 between them. But I have received now a very, very healthy amount of dividend payments overall. If I take you through onto my dividend payments in my history tab, we can see that I have now earned over £200 in dividend payments, which would mean that my positions are actually pretty much flatlined from where they are. This dividend payment is only increasing now month to month, and last month, if you haven't watched my recent monthly dividend portfolio update, you can see that I earned over £50 of this in the last month. For the next 12 months, I'm projected to earn over £650 now in dividend payments. So as you can see that I'm really gaining momentum now with the portfolio and very, very happy with how the portfolio is heading. I just see this now as an opportunity to really buy into these stocks while they are down in price. Unfortunately, I've spent a lot of capital over the last few months and I haven't got unlimited funds, which I wish I did have. But I don't have as much now to invest on a week-to-week basis, but I still do have some funds there which I have been investing. I do invest £100 into my ETF and chill pie every single week, and that is a non-negotiable, hence why this position will just continue to grow every single week. Whereas my other pies, I'm a little bit more selective in what I buy, as I've mentioned, because it is down to what stocks I believe are undervalued right now and I can get a good price at. My weekly Diageo pie, this is a challenge that I started at the start of this year. Buy one stock of Diageo every single week for the entire year. This is now down 11%, which just means that I'm actually putting in more than that one stock every single week right now because I just believe Diageo is at such a good price and long term it is just such a good staple UK company. You know, it's not going to be going anywhere in my opinion, earning so many recognizable drinks companies such as Guinness, Bailey's, Smirnoff, Captain Morgan, to name a few. So yeah, I don't believe they're going to go anywhere anytime soon, and I'm very, very happy to continue the challenge for the whole year, and we'll see where the position is by the end of the year. But that is it for today's video. It's just a quick portfolio update, and like I say, we're still in the green, we're still up 2%. Yes, it isn't beating banks right now, but as you can see, I have gained over £200 in dividend payments. I've also made nearly £100 in capital returns from selling stocks that are in my portfolio. And I know that long term buying into these stocks now is going to be so beneficial, and we know that looking forward to my paddy, it's over £650 now. So very, very exciting times. The portfolio has grown. At the end of the day, this is the number I'm focused on. This is the number that I want to be seeing go up every single month. And as long as I put my £100 minimum into my ETF and chill pie, and then also look to buy in opportunities when they arise, this number will be increasing month to month, and that's the exciting part. That's the number that I want to be increasing. We're closing in on that £25,000 mark, which I'll hopefully hit by the end of this year. I'm not concerned about the short term of the portfolio. This is about the long term. Remember that. Invest in yourself, pay yourself first, and you will reap the rewards long term. Hopefully, you will also be able to join me in early retirement in years to come if you set up your own portfolio. If you do want to start a Trading 212 portfolio, there is a link in the description down below to get a free share when you sign up. If you click on here, this link is in the description. So please check that out if you haven't got a portfolio ready and start paying yourself first. So hope you enjoyed today's video. Please like and subscribe. This is the Geordie Pig Investor, over and out.